Last year I said that December was the best month to buy. What about January this year? Next. Welcome everyone to Real Estate Daily. My name is Troy and I'm going to give you a bold prediction on what's going on. A lot has changed in my mind in the last 24 hours. But before we get into that, do me a favor, hit that subscribe button. Boom, boom, boom. I'm excited. I'm really excited. Let's jump right into it. Here's the inflation breakdown for December 2022 in one chart. Well, let's take a look at it. We saw inflation drop from 7.1 to 6.5. It's a significant drop. Well, we had an idea that this was going to happen. We think that the news was leaked yesterday because we saw that both stock market and the crypto markets both went up. They were going up for whatever reason. Now we know that it's been leaked. But more importantly, the bond market continues to wag the tail of the dog. And why? Because we keep seeing rates float down further and further. I now believe that we're going to see a big resurgence in home purchasing in the first quarter of this year because rates continue to fall. We know that as historically throughout 2022, when did people stop buying? When rates hit 7%. And then people completely stopped. So the month of October was the worst month last year, and those numbers kind of transitioned into November. But the second November started playing out, we started seeing that it was a great time to buy in December. But the only problem in December was there were buyers there, but the inventory wasn't. There was no inventory. It was almost obsolete. Now we're looking at the first week of January and still very little homes hit the market, but we're starting to see buyers get in. Why? Because loan officers are calling up their clients and real estate agents are, and they're saying, hey, we are going down in rate. In fact, I think that right now we're back in the high fives. If you're looking at somewhat jumbo products, definitely in FHA and conventional. So we're trying to see that. If we're looking at ARMs are going to start approaching in the fours, guys, and possibly if you're going to certain banks out there like credit unions, you're going to be in the threes. That's going to spur on people buying. Now, like I said, I really think that this resurgence is going to cause inflation and we're going to see some type of CPI print a lot higher than it is today in the second quarter of this year. But right now, it's really good to see that we're seeing inflation going down. Now, let's be honest. Why did inflation go down? Well, if you look at the numbers, most of it is on gasoline or oil. Look at that. Oil went down, and it went down dramatically. Why? Because world consumption went down. The Chinese had really locked down their entire market. They're opening up now. And that's why we're starting to see gas prices go up. But it's very interesting. Gas prices haven't really gone up until or after January 1st. Why did they wait? Well, they waited because they wanted to see this big, huge, beautiful print in January, get everyone excited, get the markets up, and then do that slow death spiral, I think in February and March. And then we're going to see that the earnings of all these companies are going to be a lot worse than we expected. First quarter earnings, which come out in April. But for right now, I think that this is a fantastic time to buy. Get into it right now, especially when we're starting to see refis coming back. We talked about that yesterday. We're going to see it go and work going forward. All right. So first time in all year of 2021, do we see prices come down? I get it. It's food, it's energy, everything in a nice little package. It fell 0.1% the first time the entire year. So we're seeing that. It's kind of exciting, right? But it's very scary because if you look at the last 2 years combined, or since the new regimes come in, they're two Decembers, we're looking at about 12 to 13% in a rise in inflation, guys. That means since they've come into office, they have a 13% increase in food, in energy, in all that across the board. Now, let's be very honest and frank. The numbers continue to change on how we come up with them. So we know that that number is significantly higher, probably in the 20. I keep hearing economists tell me our true inflation rates in the 15s and 20s right now, and it's never been in what's being calculated today. Because if it was calculated back in the 70s, like it was like Paul Vogel had to deal with in the 80s and the 90s, yeah, we would see a huge, bigger print. But this again is government manipulation. All right. So let's go talk about Citibank. They just got hammered for $31 million redlining settlement. It just doesn't make sense to me. The Department of Justice, the CFTC, the HUD, whatever, every time they catch these people and they're doing all these bad things, Wells Fargo, another one, all they do is they fine them. But they're not giving the people who they're harming the most, they're not giving them any kind of break. They're not utilizing that money towards them. They're just hoarding the money. So all you're doing is you're just like the IRS. I mean, you're just like, okay, we're just collecting. We don't care who it hurts. We just want to find out if you hurt somebody so we can collect money. Give it back to the people that they hurt. Give it to the areas in which, those neighborhoods in which they hurt. So let's go read this. City National Bank pays $31 million in redlining settlement, largest in U.S. history. The Department of Justice says that 2017 to 2020, the bank avoided marketing and underwriting mortgages in the majority Black and Latino neighborhoods in LA County. Now, it's pretty hard to get out of, that there's so I don't even understand this. What are those neighborhoods, number one? And if you're going to charge them $31 million, why don't you have programs in those specific neighborhoods in which they did redlining? That means redlining means that they shied away from, it says advertising, but writing mortgages in those neighborhoods. Now, I don't, they obviously agreed to something here, City National Bank, but if they're specific neighborhoods, if they're like a part of LA County or LA City, if they weren't writing, loans there, or they were discriminating in those areas, well, why don't you have a program in which you're giving, of the 31 million, you give each potential buyer $10,000, $15,000 towards their closing costs, or towards, why don't you give it, don't be a collection agency, beat your chest and go on and keep utilizing the money, because the money really doesn't get back to the people that they harmed. It doesn't make sense. I stand on my soapbox because this is the same crap. All it is, again, a collection agency. They don't do anything else but collect from these big banks and keep it themselves. And as I've talked about, yesterday was a down day all the way across for interest rates. We're looking at 30-year conforming down 4 basis points. Again, 30-year FHA flat, but jumbo is now lower, right? We keep seeing jumbo lower. Now, it's still above the conforming and FHA, but I think if you go out there and you really shop the rate around, you're going to get in the high 5s on this. And if you look at ARMs, you're going to get ARMs in the low 5s or high 4s. Guys, if you're looking to buy, it's another good time. Today we saw that there's a possibility that the Fed's going to slow down on the rate hikes that they're going to meet on February 1st. And the bond market keeps telling you they are. The bond market keeps saying, we're not scared. The Fed is not going to keep raising rates. That's why we keep lowering rates. That's why the bonds are so strong right now, is because they're not believing anything that's coming out of the Fed's mouth. Well, guys, thank you very much for joining me today. I hope I gave you some insight of what's happening. I think January is going to be a fantastic month to buy. I know I said that for for December of last year, and I was correct. The only way this is going to be good is if we see inventory hit the market. If we don't see inventory hit the market, it's going to stay tight, and we're just not going to see the sales that I think should happen until we see actually properties go up for sale. Thank you guys very much. Leave comments below. Otherwise, you guys have a fantastic day. I'll see you later.